Hello and welcome to the Data on the Rocks podcast, the place where data aficionados round up, sometimes have a drink, and always talk about data. I'm your host, Florin. I'm CEO of Veridian, and today I'm really excited to introduce a very special guest, Andra Munteanu. Andra is the Executive VP of Product and Engineering at Kraft. She's a product leader with over 2 decades of experience working in high-tech growth companies and large enterprises. In this episode, we'll be discussing the fascinating world of supplier intelligence, risk management, and the importance of understanding biases in data. We'll draw parallels between supplier risk and other types of more traditional risk management fields, and we'll explore the history of credit bureaus and how their origins have shaped the current credit systems. We'll also delve into the challenges and opportunities that data products face in today's rapidly evolving landscapes. Thank you for joining us, and I hope you enjoyed this episode as much as we did shooting it. Hello. Hi, Andra. Thanks for joining us. This is an extremely exciting conversation for me, first of all, because we have a relationship with Kraft, and I'm really excited about what you guys are doing. And secondly, or rather the other way around, because we have a personal relationship going back a little while, but that developed quickly. So hopefully we'll go a bit into details about that. How are you?
I'm good. Here in sunny London. No, it's not sunny at all. And having a good cup of coffee. And it's interesting to be, or it's not just interesting, it's exciting to be on the same continent with you so that we can both have coffee at the same time, as opposed to you drinking, happy hour drinks and me having coffee at 5 a.m. So this is really nice.
Yeah, so the theme of today's podcast is jet lag.
Yes. I agree with that. It's really fun when you travel from the west coast of the United States, from San Francisco all the way to the Romanian time zone, and then you come back into UK, and just by the time your body sort of adjusts, you're back across the ocean. It's just beautiful. The only other time that I felt this bad in my career was when I had to travel to Singapore on a regular basis, and it was just as fun, just going the other way instead of coming this way. So we're doing great.
Kick us off a bit with a bit of an overview on what you do and what Kraft does.
Thank you for that question. I look after engineering, product, and design at Kraft, and it's really funny. One of our topmost people in sales likes to say we're all in sales, and I like to say we're all in R&D, and we're all in technology as well. So at the end of the day, we're all in everything basically. But that's like the official title. But you know what it's like in startup land, right? You kind of lend a hand wherever a hand is needed. And a little bit about Kraft. We like to say we are the sixth sense of procurement and supply chain. It's a very, very, very big and lofty kind of desire. But what does that mean? Basically, through actionable supplier intelligence or just company vendor intelligence, we strive to transform the way companies connect with suppliers or vendors, and they sense and manage risk about them.
I love that. I love the sixth sense analogy. I don't think it's too corny. I like.
Okay, thank you. So it's very interesting. When I decided to join, I've been with Kraft now, I think 19 months. You know how in startup land, it's kind of like when you have a baby, you don't say the baby is a year and a month old. You say the baby is 13 months old. It's kind of like this in startup world as well. You count the months because a year feels like dog 7 years in dog years, just because of the intensity and also the fun and the super dynamic environment that you're always in. When I joined Kraft, I came from the big corporate land of Experian, and there I was leading platforms for the decision analytics business unit. So like credit underwriting capabilities and fraud. Well, it's decisioning, credit underwriting, and then fraud detection. Really cool world, very connected to the consumer land. And also, as you probably know, they have a business unit that is called Business Intelligence, and they provide information, financial information, usually about companies. So that was the closest world to what Craft does. And I was it was towards the end of the pandemic, so I was with the Experian throughout the pandemic. I think I joined them. I stayed there for about a year and a little bit, close to a year. And it's I was really looking for something when you said that the what Craft does is not corny. I agree with you because I wanted to really run towards something. Americans say you don't want to run from something at your current job. You want to run towards something. So your next opportunity should be something that you're passionate about, something that, does good in this world. So when I think about why I joined Craft and kind of what got me out of bed every day through these 18, 19 months of fun, is really thinking about how to reimagine enterprise intelligence and procurement so that we can build a more sustainable future, right? Like I want to be able, the mecca, if you think about it, I want to be able to go on a website of a company and look at a product that I'm about to purchase, and I want to be able to see the history of it somehow, or to have it checkmarked that this is a product that is sustainably made, that, the company that created it doesn't use child labor, blah, 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 blah. And I will vote with my dollars, right? Like I will vote, well, whatever currency you're paying in, I will vote with my wallet. And that's how I will help create a more sustainable future as a consumer. And then as a person that works at a company, this is why Craft was so interesting, right? So unleash the enterprise intelligence and become the world's best supplier risk assessing platform. We've got the marketing side down.
So let's unpack this a bit. So Experian and Craft, a large corporation, one of the largest, versus a startup, there are completely different worlds. However, I'd say at least from the outside, I see a big overlap in the two roles in risk management, data and analytics, and also between the companies. I wanted to ask you, from the perspective of the use cases, what would you say is similar and what would you say is very different from how a procurement person or a chief procurement officer looks at supply chain risks in general and supplier intelligence in particular, versus what you've seen in the world of credit underwriting and risk management in the financial services? Do they have anything in common?
Philosophically, they are very, very similar, right? If you think about it, a bank that's about to lend you, to give you a loan, they want to make sure that they understand your payment history. They want to make sure that they understand your assets and liabilities. They want to make sure that you're good for it, right? And if you extrapolate that and you put it in the procurement and risk management world, in supply chain, right? It's just the same thing. Are you able to deliver whatever it is that you need to deliver on time and in full? And can you do it sustainably? Are you doing it with non-child labor? Are you doing it? It's kind of the same spirit, the parallel between these two use cases. But then the data that you use is differently. Perhaps the dimensions of risk that you are looking at are slightly different. But the spirit of what you are trying to achieve is very much the same. And I can extrapolate that comparison of the use case to the background check industry as well, right? So if you think about when a person joins a company, at least in the US, I know that it's very, very different around the world. But when a person joins a company in the US, uh, from a regulatory perspective and a legal perspective, the company has the obligation to run a criminal background check and depending on the specificity of the company, they may run a DMV check, like a driver's license check and whatnot, right? So there, the idea is to validate kind of from an ethical perspective that the person you just hired um, um, has all of the different attributes that you have to comply with legally, but also that you embrace in your employees, right? And that can differ depending on the type of business you are and whatnot, and whether the laws have changed a bit and you choose to ignore certain things. So you create your risk management grid for your background screenings. The same kind of use case or principles apply when you are engaging with a new vendor, with a new supplier. You are onboarding them for the first time. You want to do a snapshot, a point in time snapshot of all of the risks that you care about, right? From financial to security, cybersecurity, physical security, cybersecurity, ESG, and name the domain that you care about, right? Whether it's a domain that you care about from a reputational risk to your company. You don't want to be on the front page of the Wall Street Journal with an article that calls you out for using this vendor that does I don't know what in I don't know what country, right? So there are clear parallels between among all of these three use cases that we just talked about, right? Like credit underwriting for you as a consumer, they look at your credit history. Background screening, they look at your existence and whether you have traffic violations or you had an arrest or whatever it is that you had. And then in the procurement and vendor management world, they look at your health as a business.
Oh, a lot to unpack here. You mentioned a lot of interesting things that I'd like to know a lot more about. So, let's take them in order. From the perspective of the client, what are they actually trying to achieve? So, protect against risks, great. But how does the item on the C-level's agenda look like? What box are they trying to tick? Is it specifically protect against reputational risks? Is it more of the ESG angle? What kind of what's the high level objective they try?
This is what makes our domain so interesting, because it's all of the above. But I think it depends on whether you are whether your C-level includes a supply chain or your C-level just includes risk management, right? So if you're in supply chain, you have to ensure the health of the supply chain. You have to ensure the health of everything that you need in order to build your products and to put them in the market, right? So you care about your strategic suppliers, you care about their ability to move the materials that you need, to move the products that you need from one point A to point B and kind of bring them into your world. And you care about that on a daily basis, right? You care about the monitoring of their status. You care about whether there was a strike that's impeding their ability to move certain items through a particular port or something like that. So you care about almost like the immediate nature of everything and anything that could impact the ability of suppliers in your network to deliver something to you that is critical for your product, for your own product line, right? That's the key thing that somebody that has supply chain in their world, in their title at C-level and above cares for. So because if you think about it, at a manufacturing company, think in industrial sector, right? Manufacturing or otherwise, that's the reason for living, right? Of a chief supply chain officer, and then of the CEO themselves, right? One of my really good friends runs a furniture a company, and it's a very modern furniture company, right? It's more like a marketplace, and he has a lot of suppliers in China, suppliers in Vietnam, and to them, the ability to get parts of the pieces of furniture shipped from China on time, so they can fulfill the orders that they have in the U.S. because they assemble things, they like paint them, they do all sorts of things in the U.S. But they get some of the prime materials out of China, and they sent the designs and everything. So if there is a disruption in the ability of the Chinese factory to deliver, then they can't fulfill the orders that they're getting from U.S. clients on the U.S. market. So that's a fail of their business in the U.S. That's why it's so critical for them to really understand the everything in supply chain. And then to this, you add the complexity. And this is just an example of like a smaller business and in the furniture world. But then you think about large companies that build stuff for the federal government sector, and they or sell into the federal government, and they have to comply with sanctions. They have to. I mean, everybody has to comply with sanctions, but for them in particular, they have to look all the way to this is my favorite expression. We have to trace within our supply chain all the way back to the hole in the ground. Like, where is that, lithium mine that creates the lithium that I can use in the batteries that I put into the blah, blah, blah. And that's the full supply chain that you have to trace. And the reason why you go all the way to the hole in the ground is because some of the mines are, for instance, in Africa, but they are owned by Chinese companies, and you don't want to have foreign influence in your supply chain necessarily because of all of the, the tensions in the in regulatory space and kind of so these are just like all the different aspects that a person in supply chain at a given company has to worry about. Now, it's slightly different for somebody that just has risk management. It's as critical, but slightly different, right? Because you're looking at, say you're a bank, and you're doing risk management. You have a risk management function, or maybe not a bank because it'll get complicated. Let's say you're, I don't know. Let's say
An asset manager.
Well, asset manager is still in supply chain, right? So you can be any company. Let's just say you're any company and you have 5 to 10 vendors, right? A consulting company, you have somebody that provides you the paper, somebody that provides you whatever, right? A whole bunch of vendors like that. And you have to have a way to onboard them and to verify kind of point in time that they are healthy from a financial standpoint. They don't have any like cybersecurity or whatever risks associated with them, because you don't want to be in the situation that Target was, where I think the famous breach at Target happened through one of their suppliers or one of their vendors, like their HVAC vendor or something stupid like that, got breached, and then from there they got access to some data, and then they were able to continue to follow the data all the way into Target land, and they were able to steal all of the payment information data that was stolen. So that's kind of the motivation of somebody that has risk management, vendor onboarding, procurement, kind of in their realm. That's kind of separately focused from supply chain. I really think about the two as the risk management and kind of procurement as an initial point in time, and then kind of monitoring over time, but without necessarily that like certain aspects of it have that immediate reaction. Like if there's a breach, you have that immediate reaction. You follow up with the vendor, and you maybe terminate the relationship, and you move them out of your world. But in supply chain, it's even more like minute to the minute. Like, oh my God, there was a fire. I had half of my production is dependent on whatever the factory where there was a fire produces. So what's going to happen to us tomorrow? And then you spring into action, right? So the immediacy of the actions that are connected to the supply chain world and tied to these evaluations and that we do, that our companies do, is interesting. Yeah.
So what I'm hearing is that it isn't a specific line in a quarterly report or a specific type of objective. It's more the macro job of I want to make sure that my company is still running.
Yeah.
Even
That's supply chain. Yeah.
Okay. So which puts it this type of data product in a very select category of products that you absolutely need in specific verticals for the company to be actually able to operate day by day.
Yep.
And so we started by talking about your previous experience in credit underwriting and in the banking world, and especially given the overlaps in the mentality and the philosophy.
Mm-hmm.
Credit underwriting and credit scoring has been around for more than 100 years.
Mm-hmm.
Why do you think, coming back to craft and supplier intelligence, why do you think this hasn't been a thing starting 50 years ago or 30 years ago? Why are we just now seeing this explosion?
Oh, that's interesting. So I think it was always there, but it wasn't so in your face. Like it became so in your face when all of the failures in supply chain happened during COVID. And it kind of highlighted the fact that there was such a lack of digitalization. I like saying that word because I always almost get caught mispronouncing it. So I always say it, in a very slow fashion. But yeah, that's basically what that highlighted. It highlighted that the just-in-time supply chain philosophy falls apart when the just-in-time, Toyota supply chain philosophy falls apart when you have a black swan event like COVID happening. And it just highlighted that all of those companies that kept their supplier lists on Excel spreadsheets on somebody's computer and they didn't monitor on a regular basis got caught in the turmoil of things not being available, and then we ended up with empty shelves in stores, just like it was when I was growing up in Ceausescu's time. Yay! To me, it was so funny. I remember taking a picture of I forget which grocery store I was in, and I took a picture. All these Americans were so appalled. Oh my God, there's no toilet paper. And I was like, yes, it happens. Sometimes it happens. Oh God, those times when you would go to the store and all there was what was it, like rows of peas, the peas,
Mm-hmm.
and you had to look at the inside the borcan. What's the word in English?
Jar.
The jar. You had to look inside the jar and make sure that the water wasn't too dirty, because that meant the jar had been there forever. So you had to go pick the freshest jar of peas on the row of jars of peas. Anyway, just funny side. Funny aside.
Communist Romania upbringing helped you.
It really did.
Did you have a full closet when we were all panicking about shortages?
Just a little bit, or actually, we got just the things that we knew we needed, without too much stress. We were like, yeah, we'll survive with this, with this, with this. We didn't go into panic mode. It was just so funny to see so many people go into gigantic panic mode and just go to the store. It was a food run. It was a food and other supplies run, just like we had a bank run with SVB last week. It was a food run, right, where everybody just went, oh my God, doomsday, we don't know what's gonna happen, just go and grab everything, and that caused a crunch. And that put pressure on supply chains, and everything fell apart because it also highlighted the huge dependence on certain parts of the world, right? So China had lockdowns, people weren't going to work. That meant there's no production. That means there's nothing that's moving. That means there's nothing on the shelves in the US. So again, see, this is why all of a sudden transparency and digital transparency and continuous monitoring digital transparency became such a paramount capability for a lot of companies that weren't really thinking about it before. So I like to call it bringing Wall Street sophistication to Main Street. That's what I like to call it.
So all of a sudden, after COVID, everybody is aware of what can actually happen.
Yeah. I mean, I guarantee you that there were people who didn't even know what supply chain was until all of a sudden the toilet paper was no longer on the shelf, right? Because they didn't even think about that. It was just there. Like little kids who are like, oh, chicken? Yeah, it's you buy it at the store. It looks like this. They don't even think that, oh, there is a farm with a bunch of chickens running around.
So I want to take you a bit closer to the sort of product mindset and combine the data asset view with the product mindset and ask you a bunch of questions. I'm curious. So I have this philosophical distinction in my head between data and analytics or data and insight, because I see that the jobs being fundamentally different, as one's job is, or the data's job is to map things and make sure they cover all angles. Whereas it seems to me, at least, and correct me if I'm wrong, Craft tries to interpret things for clients and raise flag and try to interpret the data so that it reaches a conclusion, it derives an insight. It's easy to look at something and say, okay, I need to take this action. And you're trying to, your job, the way I look at it, is to make that bridge smaller and smaller until you're able to suggest actionables, I'm guessing, at some point. So I was curious, from this philosophical distinction of the data and prediction, for me, it seems very difficult to be able to say what's a meaningful risk in someone's supply chain, right? And especially with the complexity that you're working with, where you might have 10 clients in 10 different contexts, not necessarily industries, but they look at things differently. So how do you navigate that?
Mm-hmm. So it's a combination of thank you for the context there. Because yes, you're right. It is a very complex puzzle. But the various aspects that we bring to the table are really twofold. On the one hand, we want the capabilities that we have to provide enough insights, right? Enough, hey, this is happening in your port. This is happening with this supplier. This is how they smell, and this is how they look and smell compared to their peers in the same sub-vertical or sector, other suppliers, right? Birds of feather. This is where they kind of rank according to these risks, and maybe you should take a look at them, right? Because they just dropped at the bottom 10% of whatever risk domain we're looking at, or they recently had compared to their peers in this particular arena, they are doing poorly. So that's kind of the foundational capabilities that we're offering. So you can see that in a dynamic way. You can get quick alerts on those suppliers and whatnot. And the other aspect, right, that is equally important is to make the levers of risk flexible enough so that you can account for and configurable enough so that you can account for the client's risk appetite. right? Because between you and me, probably we have different risk appetites, right? So for instance, my risk appetite is if I go on vacation, I want it to be so unstructured because I'm so structured in my work life that I am perfectly fine to not have a hotel reservation until the day of. Maybe you don't have that same risk appetite that I do, and you want to have a hotel reservation for your vacation 3 weeks or 2 months in advance before going to new country and doing whatever. Similarly, I mean, this is just a funny aside, but similarly, um, in risk management, you may have different risk appetites for various risk domains, right? So you may care less if they have this, business credit score, or you may care less if they have this, particular aspect of whatever other domain you care about. And it's not so much that you don't care about the domain at all, but it's just that what you consider a high, medium, and low risk may differ from what somebody else considers a high, medium, low risk. So if you think about credit underwriting for a second, depending on the type of lender you are, if you are giving out loans, high interest loans,
We're gonna end up talking SVB here. It's inevitable.
well, no. It's not. It was consumer loans, so not business loans. But maybe we will end up talking about SVB too. It's just that the example with SVB is not really going to illustrate my point here. But let's say you are a like an on deck or one of those salary lenders, the month to month. So what you do is you will intentionally accept consumers that have a lower score, right? A lower credit score.
That's your market.
And you're going. It's unfortunate, right? But this is what happens, and then you accept the riskier consumers because nobody else accepts them. But you're going to accept them. You're going to give them a loan product that has a higher interest. And when we think about the philosophy of it and is it good for the world, it may not be, but unfortunately that's what happens. So then you're going to have a different risk appetite from another lender that gives better interest rates, lower interest rates, but then only accepts clients that have a certain risk profile, right? Sorry, a certain credit score profile. So it's the same idea when you put it in the business world. Depending on how you're interacting with that vendor, with that supplier, you may have a different risk appetite for certain aspects of their map as from a risk perspective, right? So if we consider in our baseline risk hub, if we consider a supplier to be high risk, if they have a business credit rating of D and F, right? D or F is a high risk. Maybe you'll say, I don't think having a D business score is such a high risk. For me, in my modeling, I would like it to show as medium. But if they have any kind of cybersecurity issue associated with them, I want that flagged up as like the highest level of risk, and I want that's like a complete failure thing for me, and I want to terminate my relationship with them because I have such low risk appetite for that risk domain. So that's kind of the second aspect. So first aspect is we give you best practice, we give you the information that's kind of like foundational. And second aspect is we give you the ability to interact and configure that foundational risk information based on what your risk appetite is.
So if I understand correctly, you're not taking the role of a, let's say, rating agency, where you say, I'm going to establish exactly what's a B and a C for you. Because I understand.
We can, and we have that capability, right? So, but a lot of our clients want not only to see the rating, they want to see what went into the rating. They want to have the ability to influence the weight across the board of all of the elements that went into the rating, right? That's the.
Yeah.
It's a little bit of what happens in. If you think about consumer world, it's a little bit of what happens with the oh my goodness, firms of the world, the category. See, I perfectly
BNPL.
yes, buy now pay later, right? It's a little bit of what happens there. They sort of pre-screen and check your credit score, but they don't care about it that much in the risk modeling that they do. It doesn't mean that they don't ask for your social, but it's only like a minor data point in the risk model that they build about you, right?
Which I think it has several causes. One of them is because they want to expand their
Exactly.
target
They want
across
to
on
do that.
bank calls and so on.
Yeah. They want to do
But
the right thing for people that have been historically excluded from the banking world because of the risk scoring system. I mean, we all know about redlining with risk scoring, and so there are all sorts of implications there. I'm a big fan of buy now pay later. I really am.
another reason, however, if you look at, let's say, a company like Klarna, they need to be active in so many countries, and there are so many inconsistencies. Even at the basic level, like in which country do you have good coverage on credit scores? But also,
It's a little bit like in our world with businesses. It's the same thing.
that's exactly where I'm going. I was gonna ask. So let's say you have a client that has 30,000 suppliers everywhere across the world. I expect it's impossible to make a perfect job at like balancing those inconsistencies. But I'm sure you have to do a lot of that job, not perfect, but something. So how do you manage that?
And this is where the art and the science of canvassing either third-party data providers or engaging a human in the loop to go dig for that information. So we have that's why in our world we think about inputs into the model, right? Inputs into our data platform, and then into the risk modeling that we do and analytics that we do as based on 3 data types, right? There's the third party data, risk data that comes from all sorts of data partners, and they almost help validate externally, right? A lot of the information about a supplier or a vendor across all of the risk domains that we have. Then there's that's third party data. Then there's second party data, which is data that we can collect directly from the supplier, and of course, that's the data that you trust but verify, right? Always trust but verify. That's why you have the third party engine that helps validate some of that data. And then you have first party data, which is data that the client, our client, has about their supplier, right? Including total amount of spend with that supplier, including bills of materials from like statements of work and whatever other like contractual engagements that they have with that particular supplier. So all of these aspects kind of help create that 360 view of the supplier. And then on top of this, you can, with additional constant inputs, you can create more relevant risk modeling. So what happens is you may have a very obscure supplier out of country, I don't know, name a country that doesn't have a lot of digitalization. And and there you do as much research as you can, like if they even have a website. If not, then you reach out in country to whatever. Sometimes information can come from the commercial department or like the U.S. embassy and the commercial attaché in that particular country. So it really varies. And then other times, I mean, if it's a supplier that's in a country in the middle of nowhere, that's literally out of the dad's garage, maybe you should know that that there's no data about them. It's like two guys, two people in a garage somewhere in the middle of nowhere. Do you really want to do business with them if we can't really find anything that's relevant? And it's really funny because you would think that the U.S. is highly sophisticated and there's everything is digital. And after working in the background check industry, I can tell you that it's not true. There are still like counties in various states around the United States where all of the information, like criminal background check, criminal record, your driver's license record, it's still analog. So we were working with companies that had court runners that would actually physically go to the court, and they would pull records from the court, and they would read them, and then they would input them into the back end of something that we had, and that's how they just got the data to move from analog to digital, and that's a lot of what happens around the world too. So one of the data providers that I was working with when I built the international platform, the international background check platform at Checker, so one of the providers that we were using literally had relationships with law firms in various countries, and the law firms had, paralegals or legal assistants, again, who would go to whatever court service, and they would pull the information, and then that information would get entered into this data provider's database manually, so manual data entry, and then we pulled that information through an API integration from the data partner. So it's a puzzle, right? If we all lived in the Matrix, it'd be completely different, but we don't. So it is what it is.
Crazy. So here's another answer to why we see this only happening now.
Yeah.
It's also a logistical challenge of data acquisition.
Exactly.
Whereas if you had the equivalent of a credit bureau, those challenges got solved like 100 years ago.
Yeah. But I mean, even with companies like Experian, the credit bureau concept exists in US, in the UK, in Canada, a little bit in Brazil. Outside of that, the data is all over the place, right? Because Romania didn't have a credit bureau. Are you kidding me? We barely had banking. It was a cash economy. So if you look around the world at all of the cash economies, this idea of credit, you know what credit was in Romania, which is how credit started in the UK as well. Credit in Romania, when I was growing up, was you would go to the corner store, and the sales lady had a running list of everybody that got stuff, and you would pay for your pack of cigarettes or whatever it is that you bought. You would pay for it when you got your paycheck. That was credit in Romania, right, for the longest time. So and that's credit in a lot of the cash economies around the world.
And do I know this story correctly? Do I remember it correctly that the Experian started as...
They started in the store. They started on tailors.
So direct response marketing coupon, right?
Yeah, exactly. So it was I don't know that I would say a direct response marketing coupon. It was really about, well, if you think about the UK, they actually started the whole credit, UK and France started the whole credit idea way sooner than a lot of the other countries, right? Because if you remember in the UK and in France, you could go to the store and buy clothes, or like the richer you were, the more credit you got. And I think in Italy too, right? Like the richer you were, the more people would provide services to you, and then they would come and collect whenever you hit trouble points, and then all of a sudden you had to sell everything around the house and your furniture, and you became destitute. So I think when Experian actually officially started, it was from a merchant. I forget which merchant, but it was a merchant that had such a sophisticated set of books where they tracked everything that everybody bought with this like store credit, that it slowly became kind of a standard, and then it became a digital system, and so on and so forth, and it turned into credit. And it's very interesting because it's so mired. Like in the US, there were big groups of the population that were excluded from the credit system originally, including, Black people. And so it's a very, the history of FICO and credit scoring is fraught with all sorts of little anecdotes like that.
It's also it's a massive job and the less that you need to do as a sort of predictor of the future risk or predictor of future opportunity. And I think the more we go back in time, the harder it is, just technically. Like, you don't have the means to make sure your decisions are well balanced or your predictions are unbiased in ways in which you don't want. And you always are, at least the more you go back in time, but I think this to some extent is true today, you do some sort of version of the past predicting the future, which is just another way of saying bias, right?
Yeah, exactly.
And I think with our generation, we will see this changing a lot because now we have the right technology.
Mm-hmm. Yep.
But
so the way when you ask the question about it's so difficult to be predictive in our world, right? Or not difficult, but it's you get when you look at the insights layer and you look at the analytics layer of the world we live in, how do you manage the complexity? And it's interesting because I think about that with the lens of how much information can I give you in the most easily accessible way, and then organized in the most humanly readable fashion, so that you don't have to dig into the data sets and try to draw your own conclusions, but rather I make it humanly readable for you, so that you can understand that this company is at the end, and maybe you should do something about it. I won't tell you drop them, but look at it, right? It's an insight, right? That I can share, or this based on our data set, companies that are behaving like this, or companies that had indicators like this in the past are got in trouble or something, right? So that's again like it's an insight, like a mathematically derived insight. You can read and then decide what to do. Just like in the background check world, the companies like Checker give you the background report, but they don't make the decision for you as a company whether you should hire that person or not. That is still within your purview. You can choose to ignore that they had an arrest. You can choose to ignore in your risk rules, right? You can do it automatically, so then you don't even see some of that stuff because it's not even part of your decision model. Or if you want to see it, you see it and you still ignore it and you still hire the person because you don't care about that stuff, right? One of the things that I really, really appreciated about Checker, and sort of there's the parallel in our world with building a sustainable future. For Checker, it was kind of unblocking people from getting access to work, because the background screening, the background checks were really blocking people with arrests, or people who were, when they were teenagers, they did something stupid and they actually ended up in juvie and whatever, and they were forever stuck menial jobs, and they didn't have access to the same level of opportunities that other people did, simply because things got flagged on their background check. Well, it's 30 years later, it's 20 years later, and they're a completely different person. And why should they be penalized for something that they did when they were stupid and a teenager and lived in a really bad neighborhood and whatever, right? So that was the thing that I really connected with, the mission of Checker in that world. Because if you think about the gig economy, right, it is an opportunity for people who don't have time for a 9-to-5 job, or they don't have access to a 9-to-5 job to get money to put food on the table, right, and a roof over their kids' heads. So anyway, I get excited about stuff like that.
No, I think it's completely understandable, and I think we've all experienced some sort, definitely some more than others, but in a way we all experience different. I will call them data biases, because that's what they are. Where something in your background makes for a bad prediction just because it used to be correlated 50 years ago and nobody revisited the model. So I'll give you it's a very basic and stupid and with no consequences example, but I cannot get midterm and long-term rent in the US under my own name because I don't have a credit score in the US. And for me, that's not a problem. I have ways to work around it. But for other people that want to go to the US, it might be the main reason why they're not able to.
Got it.
And that at the office, we see a different version of that of whenever we have a company with a very complex due diligence onboarding for technical solutions.
Mm-hmm.
And it's all sorts of manifestations of just the model that hasn't been revisited in a long time, where even if you do like a POC, you need to show a lot of things that only very mature companies can do. And sometimes they're very arbitrary, like number of years of generated revenue rather than how much you're making right now.
Yep, exactly.
So I know I promised you we're gonna stop in 3 minutes. I just want to ask you one more question. And thank you for spending the time with us. So there's this interesting dynamic that I think it's very specific, or it happens a lot more in data-related products or products with a very heavy data component,
mm-hmm.
where we spoke a lot about supplier intelligence and about risk management. But at least from my experience and from what I see in different clients and partners, there's this trait of data products where you try to make a product for use case A and sell into use case A, and then you'll have a lot more often than in other types of technology products, you'll have a lot of clients that repurpose the same assets for use case B or use case C or use case D. And I was wondering if that happens and to what extent at Craft, and is that something that bothers you, or something that you look at as being a massive opportunity?
I think it's a massive opportunity. I think of it as that common thing that happens in product where you build something and then your users hack their way into new use cases and kind of give you ideas for how to expand your product and how to build new features, functionality, because you have to pay attention to the hacks, right? So they kind of take it somewhere where you didn't even dream about it, and that's why you pay attention to it, and that's why you always look at your usage data, and you look at your trades, like not the trades, anyway, I can't remember the exact word for it. Trends, not trades. See, another coffee. You look at the trend lines, and then you decide, and even the outliers, and then you figure out why is this outlier here? What's going on here? And you dig into it, and you realize that, oh, this is what they're doing. Oh, that sounds interesting. maybe I should focus on that, and I should build something and productize that capability or that use case. The same thing happens in data, right? Like I like to think about the inception story for craft. Craft's been around for a while, and it started out with a lofty big idea to organize the all the information about the companies around the world. And it was interesting because there were some small incumbents there, like Dun and Bradstreet and a few others. But it started around the time that Zillow was on top of the wave, and they had pulled all the information about properties, and so that's how whenever I talk to Elia about the inception story of the company, because actually he founded it here in the UK, and then moved to the Bay Area in 2019, 2020. It started out as a make this information available. It's a maybe like competitive intelligence, like market intelligence about all of these companies, a whole bunch of data. Make it better than just doing a Google search, make it available publicly on the website, and then from there figure out how to package enterprise deals, right? And then as COVID happened and the supply chain risk insanity started, all of a sudden we realized that the data that we had about companies, we tweaked it slightly and we added a few more risk domains and we did this, all of a sudden it was the perfect fit for supplier intelligence and for figuring out how to help companies better manage their risks and kind of monitor their suppliers. So it was a perfect case of clients came to us, they said, we really like your data, the quality of the data, the information that you have here, but we would like to do this and this and this with it. And do you have this kind of a capability? And do you have this? And then we leaned into it hard, and that's how we built some of the extra functionality. So I think it's a blessing to have the ability to get these varied opinions about use cases and the hacks that people do with your product, because it helps you grow as a company.
Love it. Thank you so much, Andra. For me, it was an amazing pleasure. First of all, to spend time with a fellow member of the Romanian mafia, and with a fellow professional so passionate about data. Thank you so much, Andra.
You got it. Thank you so much. Thank you, Florin. I'm so happy we finally made this happen.